In 2024, IRS audits were actually fairly rare. Only about 1 out of every 312 individual tax filers incurred an IRS audit, and those audit rates were even lower for business taxpayers. Now, audits, they can be very serious. A lot of additional taxes and penalties can be owed as a result of an audit. The simplest of all audits, which is the IRS Mail Audit, usually results on average in additional tax about $17,000 per tax year. If you get to the more comprehensive office and field audits where the IRS meets face to face with you, the average amount owed is usually well in excess of $100,000 per tax year. Now, that's skewed by really higher income taxpayers and those large corporations, but you get the point. They're very expensive. And the IRS makes an audit adjustment in 9 out of 10 audit cases. So the chances of an adjustment, if you get selected from an audit, are pretty high. On top of that, 40% of all audit cases come with an additional 20% accuracy penalty for failing to report accurately. So audits, again, can be expensive. So having represented a lot of clients in individual and business audits, I get this one question a lot. What are the likely reasons I'm going to get selected audit? Why is the IRS selecting me for audit? And there are 6 main reasons that the IRS actually selects you for audit. The first one seems pretty simple, and it's on lower income taxpayers. It's the earned income tax credit. The IRS generally has to audit these taxpayers to go ahead and freeze erroneous earned income tax credit claims. Now, 70% of all individual audits are done by taxpayers who make less than $50,000. This is the number one issue that they go ahead and audit. It's kind of ironic. Lower income taxpayers seem to have the highest audit rates. Now, the second reason, and a very likely reason, is unreported income. The IRS suspects that you have unreported income. Now, a lot of times, if this is an unreported W-2 or 1099, the IRS won't do an audit of you. They'll issue you a matching notice if you're an individual called a CP2000 notice. CP2000 notices are not audits. But suspected unreported income is always an issue in audit, and especially one of the main reasons that small businesses get selected with the audit for audits. Now, the IRS has new tools in their bag, increased reporting on forms 1099K. Those are your debit and credit cards payments that are made to individuals and businesses. That's going to get more income reported to the IRS. More cryptocurrency reporting, that's going to increase the IRS's information to go ahead and select more people for unreported income audits. The third reason, and this is an obvious one, is you have a large, unusual, and questionable item on your tax return. Now, so this is, again, pretty obvious. For example, someone makes $80,000 but has a $100,000 charitable contribution on there. Those people are going to get selected for examination. The fourth one is high-income taxpayers. High-income taxpayers are generally those who make more than $400,000. Now, they have a higher likelihood of being audited. But if you make more than $1 million, your audit rate is generally, the IRS likes to keep it around 8%. So higher incidences of audits in those particular areas for higher income taxpayers. It's always been the case. But in 2024, 2025, and beyond, the IRS would really like to audit a lot more higher income taxpayers. Now, the fifth area is what the IRS likes to focus on, what they call their audit project codes. This is an area of non-compliance that the IRS understands, and they go ahead and they want to audit a lot of taxpayers on this. If you have an S corporation and you haven't paid your officer reasonable compensation and therefore you're avoiding payroll taxes, that's a long-standing IRS project code. There are many different types of project codes, like hobby losses, where you're deducting a hobby on your tax return as a loss, disguised as a business. The IRS loves to go ahead and audit that particular type of issue in one of their audit projects. The last one is kind of disturbing, right? It's whistleblowers, right? Whistleblowers. It's someone turning you into the Internal Revenue Service. And we saw a lot of that in the past 2 decades where some individuals turned in like Swiss bank account holders and such like that to the IRS, and the IRS resulted in an audit, and there were significant adjustments to that. Now, it doesn't have to be as serious as a Swiss bank account. It could be your neighbor turning you in for a side hustle. Say you have like a garage sale every week and you're getting significant income and you're bringing in items and such like that, and your neighbor is somewhere angry about you about it and turns you into the IRS. Those can all result in audits. So it's those 6 particular areas where the IRS likes to select. Now, they can select you at random for an audit, but it's not likely that the IRS will go ahead and do so in 2025. Very few random audits. Now, when the IRS selects you for an audit, they usually know there's going to be a change. Remember that about 90% change rate. So if they select you for an audit, they usually know that there's something on the return that they want to question. So if you have any questions about your audit, or you've been selected for audit and need some answers, you want to step by step to go ahead how to proceed to resolve your audit, contact me. We'll discuss it. Thanks.